In 2013, China's economy is growing by only 7%. While this would be a top performance anywhere in Europe, it is the lowest growth rate China has seen since the year 1990. Back then, the country started its rapid catch-up process, trying to reach leading industrialized nations. By 2007, annual economic growth in China had reached 14%. Today, China is the second largest economy, just behind the United States. China's political leaders are now planning to change course. Instead of focusing on export-oriented industrial growth, the country is now promoting domestic consumption. There are, however, a few stumbling blocks. The risk factor number one is the financial sector. On the one hand, China has a state-controlled banking system which channels central bank money into investments favored by policymakers, so far mostly into heavy industry and infrastructure projects. This gave banks very few incentives to adjust their lending policies to the risks or the expected return of funded projects. Ultimately, everybody expected that the Chinese state will back these projects. As seen during a brief spell of panic in June 2013, China's financial institutions, which are used to loose monetary policies, are easily shocked by the central bank hinting at future tightening. Also, a parallel system of shadow banks exists in addition to the state-regulated banking system. This system of shadow banks includes all businesses and investment funds that lend money without having a banking license. According to estimates, shadow banks account for more than 50% of all new loans granted in China. There's an obvious systemic risk inherent to these unregulated shadow banks. The real estate market is yet another problem. It has grown steadily in past years. While the state-controlled banking system provided a substantial flow of liquidity to the real estate sector, this sector also offered one of the very few options for foreigners to invest directly in China. By now, real estate prices have reached such high levels in many cities that ordinary people struggle to buy a home. At the same time, residential blocks and shopping centers are standing vacant. This could be a clear sign of a real estate bubble in the making. If this bubble were to burst, quite a few investors and banks would probably find themselves in deep trouble. Another problem is the increasing divide between rich and poor. Millions of migrant workers from the poor western parts of China are especially affected by this problem, for they have no urban citizen rights in the booming cities located on China's eastern and southern coasts. Compared to local urban citizens, migrant workers face discrimination when it comes to health insurance, schooling for their children, and housing. Originally, the system of urban citizenship, called Hanku, was meant to reduce mass migration from rural areas to cities. It has actually created a two-tier society. In the long term, China will face problems resulting from its one-child policy, which has been in place since the year 1980. A generation later, this policy brings about a rapidly aging population, and after the year 2020, this will translate into a declining active population. For now, it is impossible to predict how this will affect the country's economic development. Finally, it must be said that China, despite its economic liberalization, is a nation without any political pluralism. According to China's communist elites, the one-party rule is a factor of stability. History, however, has shown that authoritarian regimes are by no means more stable than pluralist democracies.